Hello guys, glad to have you on board again today. I hope you've been catching up on the update yesterday for the weekly regular update on TradingView. I'm going to go into a bit more details today, scrolling through the major assets in the crypto sector one by one, looking at their technical structures because I've been asked to do such a thing via numerous emails. So I've thought about going public with this because I think it can profit everyone. So as usual, technical analysis in here, meaning that you can agree, disagree, or whatever that is. I'm talking about technicals only. I don't matter what you think of this or that project. All I'll do in here is assessing the risk limitation perspective of each and every one of them. So what are their context, how mature, where are the technical risk limitation areas, what are the latest signals, and all of these things. We're going to compare these one to another, and you'll rapidly see that a clear picture is emerging very, very, very easily. So it's not necessarily that easy. It requires mastering my strategy. So as usual, it takes some time. It may look overcomplicated in the first glance, but it definitely isn't. Okay, so let's get it started with the big boy Bitcoin. So quick summary of what we've already said into the weekly update. There are several factors. We need to figure out the appropriate time frame to look for, and we look for convergence divergence patterns. Basically, where do we have opposite signals? We have a bullish trend going on in the weekly charts. This basically says that the moving average is below the context. So it is signaling that a trend is still going on in a weekly chart time frame, and we have a moving average that is inside the context in the daily chart. So that could be the sign of a range. So we've got an opposition in here, neutrality inside the trend. So this is where the risk limitation shows up. So we go for the daily chart, and this is of course where we see that range. The range is mature and has made higher highs and higher low points, which is kind of a dynamic structure. So pretty bullish in terms of overall control of prices. Still, that has been a neutral range, meaning that the third range boundary's nature has been closing above the resistant context and has provided very little risk limitation to the downside. So, of course, the bulls really had it in control, but we still suffered the immense withdrawal effect that we have experienced throughout the latest few weeks. Of course, I've always pleaded for bullishness and buying anything into this blue area, but I've of course bought way earlier than that, but still, okay, so remember my personal entries were 44k, 40k, and 37k, and these are the prices I bought, and this was basically entering the resistance context, the support context, being inside the support context, and trying to go below as dangerously that was back then. Okay, so still, this is the thing, okay? Where are we today in terms of Bitcoin's positioning, relative price performance? So the range has 4 boundaries now, meaning that it's mature, meaning that the only structure that we can apply now is trading it as a dumb range, meaning that we put our Fibonacci tradable areas and we look for dumb patterns only. Out of the dumb patterns, there is a couple of them. As usual, you've got everything into the Prezi. If you need some updates, let me just gather it. I think it's there. So if you need a refresher, all of my risk limitation have been pulled into these things. So this is kind of the Bible for the strategy. Okay, so this is where if you have any doubts or things like that, all the rules are written black over white. White and green on blue at that point. So this is this is the French version, okay, but these are the 2 patterns that you can apply into a dumb range structure. Okay, so we've got all the sets of rules necessary to trade them and the risk limitation if you intend to take that trade. Okay, so out of the patterns, none of these patterns can actually perform, as you'll easily see on the chart. So learn those patterns if you don't know them. There was only one in here, which was basically getting into the blue area and being below the context. So this is where buyers could get in. We had nice risk limitation, as anytime the market provided bullish signals, the market immediately reacted and built the bottom out of it. So this is real great risk limitation for the bulls to have bought these prices. So the bulls have it under control. Okay, though the next risk limitation is now going to be if we go above the context, the resistant context, in the red area, which is of course going to update as the end of that month is coming along the way. So we'll get a new context. As the channel is decreasing, expect the next context box to be slightly below the previous one. So the next technical resistance in Bitcoin is at 62k. Congratulations, folks. So that means nothing is interesting in terms of Bitcoin trading because we're in the dumb range until we get to 63K. So good luck with that, okay? The bulls have scored the latest points, and now the question is how long is it going to take to get there, okay? And of course, each and every month, these levels decrease. So we'll see, but for now, the level is approximately 62K. So good luck with that if you want to be a short seller. Then, of course, we can study this by looking at the current market top to bottom in that range. And in that perspective, we'll see that we are dealing with the highest level of volume. So this is where we left the biggest volume into that latest very painful consolidation. So pay attention to this. Dumb zone, meaning no one trades there. So don't be the dumbest ones to trade here. Don't pay attention to anything that happens out there. But just understand that this is where we left quite some volume. So I would say there are quite some probabilities to see some noisy price action in the Bitcoin. So as usual, don't be dumb. Don't trade into this area, okay? But understand that there is a very likely probability to see Bitcoin slowing down the momentum into this nearby area because we have some volume left behind to handle in here. Still, it also comes along with the fact that there is no fucking supply. So bear that in mind. We can trade the DOM range in a very much diversified manner. Looking at the fact that this is where we left the most of the volume, I would generally agree to say that we're very likely going to noisily stay there and kind of boringly range out there. But the fact that we have no supply means that every little bit of demand will push this thing to the moon. The thing is that we have multiple demands factors, like Luna, for example, is going to buy Bitcoin, and they've announced how much they will, and this is, of course, kind of significant. That means that regarding the limited supply, these kinds of buying pressure, we're talking about billions, can have bullish amounts of prices pressure significantly enough, moreover, when they've been announced, okay? So bear this one in mind. Bitcoin is in the confluence of two contradictory elements. The first one is that we should range out there because this is where we have most volume and we're in the down zone. But the second thing is that we have no supply and there is demand from multiple factors because Luna is just one of the bullish demands for Bitcoin. Okay, so if we have a look at other assets, I would do the same thing for ETH, but we'll see a totally different context in here. Much more bullish. Because in here we failed to close below the context. We've made daily candle closes below, only on a volatility pattern, but we've closed the context boxes inside. So that means the bulls have way more control over prices in Ethereum. We had absolutely no problem handling candle closes above the resistance context in here, signs of range neutrality, and the same thing as Bitcoin, high highs and high low points, so very dynamic thing. If we have a look at the volume left behind, this is where the story is different as well. Look at that, there is absolutely no volume left behind for Ethereum in here. The next volume area for ETH is going to be over $4,000. So same thing goes as Bitcoin. There is no resistance in here until we get there. The latest buyable dump range strategy was that low point with very nice risk limitation. Pretty much the same nice buying entry as there was on Bitcoin. But the thing is that in terms of resistance, okay, as we've seen, there are some contradictory factors in Bitcoin due to the fact that there is lots of volume inside the DOM zone. It is not the case. So in my personal opinion, the way Ethereum is going to deal with that intermediate dump range boundary or dump range area is, I think we're not going to stop at all. I think that Ethereum is going to keep pushing until it gets to $4,000. The thing doesn't mean that we're going to be there in 2 days. So don't get me wrong, it takes a little bit of time to work this out, and we can see that there are already price acceleration, meaning that, in my personal opinion, it may have to slow down the momentum because we cannot sustain such high thing. We're 113 in terms of momentum, meaning that, in my personal opinion, this is non-sustainable type of thing. That doesn't mean there's going to be any retracement. In my personal opinion, all we're going to get out there is kind of flat structures before going higher again, and we can still at least get to the target. So there is no volume in here, so could very well do this and this on Ethereum, but my personal opinion, nothing to do until it goes above $4,000. I'm sorry to say it, once again, everyone cracked down on Ethereum because it was bullshit, unscalable, whatever that is. Absolute crappy bullshit FUD spread all across the board, But in the end, Ethereum survived. It's still absolutely leading the DeFi sector, whether even people spitted shit on it. It has no legitimate competition so far, even though layer 1s tried to, no one succeeded so far to take it down. And now that the scalability issue are rolled out through layer 2 scaling solutions, boy, you really want to think twice about putting too much money into alternate layer 1s, because the money will literally go back to the heart. The blood will flow right back into the heart. That's really what it was always all about, finding scalability solutions. And now that we have them, well, money will likely go back to where it was before, meaning Ethereum. This is where innovation stands, this is where the devs are, and whether you like it or not, even some alternate solutions might have brought some interesting solutions to the scalability problems, but they brought up some other issues. We've talked about that into the educational series for 2022, in which I've highlighted the fact that, oh boy, oh man, I still need to do this one for you guys in English. Shit. So yeah, no spoiler alerts, but those who figured out by a solution to the trilemma, okay, so one way to figure out scalability solution without too much compromising into the decentralization and security, they figured out a solution to this trilemma by just derivating the problem into some other sector, which is governance and interoperability. So we'll see all about that, but every layer 1 alternative who has somehow solved the trilemma has brought up some huge concerns regarding governance. So we'll see all about that. I'll still have to record that video for you guys. Okay, so ETH. Then comes Atom. In here, the technical structure, same old thing, big mature range, okay? Lots of volume in here because the all-time high still remains in here in this flat range structure. So this is what we have. Oh boy, so much volume in here, meaning that there is absolutely no technical resistance. Next volume area, volume node would be 36 dollar, but the thing is that there's absolutely no technical confluence in here due to the fact that the resistant context is where the trend channel is where the resistant context is, so there is no technical resistance on Atom until $45. And like I said, this is a wave 5 extended structure with two alternate fake trend breakouts who have overlapped each other, meaning that if we ever attempt to break again, this is where the trend will settle and will be a wave 5 extended, so it will be bullish, stupidly over bullish. Everyone will buy, everyone will go in, whatever. You know the thing, so it's going to be wave 5 extended type of thing, very brutal type of trending structure, and it will V-shape reverse to build the market up. So yeah, Atom, technical resistance, absolutely none, so it's just a matter of time. Plenty of bullish catalyst for Atoms. Theta upgrade is down the corners. The testnet is working just fine, and the vote on the governance to update to Theta has been going on for a few days, and of course everyone agreed on this. So Theta is going to Cosmos, meaning that the interchain accounts are just a matter of days. So it's delivered on time as it was expected Q1 2022, so it's always the end of Q1. So we're right on time on Ethereum, on Atom's development side. The technicals look very great, but that also means that until further notice, we're in the mid fucking area of a range, meaning that this is the same old dumb range structure, so don't be dumb enough to buy into the dumb zone, okay? But understand that this one has to break out of this range if we want to get something to trade. So until further notice, don't trade in the dumb zone, but wait for this, okay? This range has no resistance, neither on technicals and on volume, so this one can go real fast, okay? There is not going to be a resistance in the resistant area of the dumb trading, because we always have to trade above the context. So sorry guys, the context resistance on Atom is $52, which doesn't align with the resistance of the dumb trading pattern, meaning that this is an open door to the upside. So for Atom, it's always the same thing. Is it going to be demanded? The Cosmos ecosystem is very much in heavily growth right now, but that doesn't mean Atom token will take on that growth. It's really a speculative guess, but if it works out, well, if there is a bit of demand for ATOM, there is no resistance up. So we'll see all about that. ATOM is still underperforming currently because it still haven't broken the resistance trend line, meaning that both the bulls and the bears are in control of the momentum. If the bulls somehow take over, it's going to be brutal. So don't be dumb enough to fight against ATOM. If it goes up, it's going to be a rocket ship, but that doesn't mean it's going to. So those who buy the mid part of a range because, well, it only can go up are the dumb ones. You should never trade in a dumb area. So this is not an area of interest for ATOM. You should have bought already if you wanted to do it. Now it's too late. Okay, then comes Link. Quick update. Same thing in here. Very quick stuff. Big range, mature range, with a bearish third range boundary. So we were to buy below the previous bottom and normally below the context, but we failed to succeed on candle closing in here. But okay, I'll explain very quickly. I have some intermediate maturity patterns of multi-time frame trends by the alignments of trend following and pullback. So I can hardly go down to the whole story in here, but that has led me to be very aggressive into this thing, because if it ever retraces up to the third range boundary, next bull wave is not going to be pretty. So until then, of course, I've made a video entirely about Link, explaining everything about the actual change in the token structure, the fact that they're going to introduce staking and lots of other demand factors. So there is definitely some reasons to change the asset price targets, but still, this is also speculative, doesn't come without risk taking and so on. So we'll see all about that. If we study the volume for this thing, we take bottom to top, of course, and this is the big volume we have. So lots of volume in here. So this is where I think it's headed. First risk limitation will be at least getting in here, but as the 50% context line is above, there's no resistance below it. Okay, so this is just an intermediate resistance on the trend channel, though this one could be broken easily, but there's a bit of volume to process first. So I pay attention to this area. This is why you see this alert, by the way. Okay, next level, if this one gets broken up, because most of the other assets have broken their trend line, their bearish trend lines, which is not the case now for Link. So Link still has to do it and show some strength. The moving average is still rising, so it shouldn't be a big deal. But of course, nothing is ever for granted. So I'd like to see Link taking over on performance recently. It is one of the most bought assets in the bottom by the Ethereum smart money, meaning that the big ETH holders have piled up on Link tokens during the bottom structure. And like I always say, follow the devs and follow the money. So I like the fact that there are some good devs going on in Link and some good money as well. So we'll see all about that, but as long as it doesn't translate to prices, well, that still remains speculative guesses. So I like the context, but as long as it doesn't show up on prices, I do not believe it. So I'd like to see this one broken, and of course, if we get there, we'll see a confluence of the resistant context, big volume. So there's definitely going to be an area of risk limitation on the 27 and above dollar area. Next, so I'll pass on this one. Pretty much looks like an index of assets. We'll eventually make a podcast about this one. Solana, we're trading at the resistant trend channel. We have some trending signals, so pay real attention to this one. It's not an easy gamble and definitely not an one battle. The range in here has no third range boundary, meaning that if we ever rebound, we're going to build one, therefore huge resistance on the resistant context and eventually above. Depends on the nature of the third range boundary that we'll get. If it is a bearish third range boundary, then it's very likely going to be sold at $170, $80. If it is a neutral third range boundary, we'll sell into the $200, $220 mark area. So there are lots of resistance for Solana in 2022, and I don't think that there's going to be all-time highs for this token in 2022. That also doesn't mean that this doesn't worth a buy entry, because of course at $80 the token, going out of 200 is very, very likely. So this is more than 2x even on a range, so very goddamn volatile asset. Okay, so in that perspective, interesting to me, the trend channel is below 50% context, meaning that this area is pretty damn illiquid, and we could break out of it very quickly. In terms of volume left behind, lots of the volume is on the bottom, leading me to believe that this asset very likely will build some kind of triangle pattern. That's the reason why I bought into this lows. Though, that's a topic for another day. I don't think there's going to be all-time high for Solana in 2022, but I don't think we'll ever get back to $80 again in the future. So working out into this range is going to be complicated. I've put in my intermediate targets where the volume is. And of course, this one will be just an intermediate risk limitation, kind of very tiny partial profit taking depending on the signals. And this one in here is a mandatory profit taking for my Solana bets. Binance. We are trading at the trend channel on a rising context, and the trend channel is below, leading me to believe that there is lots of upside potential for Binance. The bullish cycle is here, the momentum is strong, and the bears have very little control over prices, at least for now. So pay attention, we have trending signal and we're trading the trend channel, so this is not a one battle. But if this area gets crossed over, that's the sign that the bears are not there. So as usual, I do not like to trade trend channel when they are below the context. So I think anyway, the bears might resist a little bit in here into this resistance, but if it ever gets broken up, it will rapidly shift prices higher. In terms of range structure, the previous market top is in here, and we're still diving with this. We're still trading with this. So as of right now, very mature range, a lot of volume accumulated. So I am okay for Binance to get the hell out of it. But as we've made an entire podcast on this, it requires a shit load of changes, meaning that in order for Binance to say goodbye to the $500 range and to settle for higher valuation metrics requires deep changes. Those deep changes are going on with the roadmap of Binance for 2022. I got them like the roadmap and I said it out loud. The latest announcement, I think it was yesterday, is that they're finally rolling their scaling solution. Pretty much something similar to AVAX's subnet system some way. Though, of course, the AVAX army is calling for copycats or whatever. I mean, I can hardly understand these guys. They're so crazy. But still, okay, of course, Binance has a good solution for this. It's not the same as AVAX's, but it's pretty similar. But as usual, innovation can rapidly be copied, and that's exactly what Binance is very good at doing. So Binance is taking on. It's not going to be good for AVAX army because once again, you guys think are the best, but you're just no better than any other. So of course, AVAX will be under huge competition from Binance. Both have very centralized governance. And I very much have made my choice. I am on BNB's side rather than AVAX. I could be wrong, and if I am, I'm going to sell my BNBs for AVAX. Until further notice, I think the technicals are favorable for Binance more than they are for AVAX. We'll see by studying AVAX later. So, of course, this doesn't come without challenges. So Binance has to break out of this trend channel, break free from the bears, and we'll see Binance thrive. Of course, once we fucked up that trend channel, no resistance for Binance until the resistant context that for now still remains rising, meaning that if Binance succeed flushing out the bears into this area, there is no resistance, there's not that much volume up here, so it's an open door for all-time highs on 2022 for Binance. If and only if this succeeds, transitioning the model and the business model of Binance, and we've made it clear into the assumptions that we've made into the Binance specific video, it all remains to one very essential factor, the confidence that the people have in Binance. If that confidence flushes out to go to another project's, AVAX for example, in that perspective, Binance will fall off the damn cliffs. It is a very centralized project, but as long as confidence is in here, centralization is not a problem. I've made it real clear. AVAX is no more decentralized than Binance. They are just as safe one to another. This is just an economic model for distributing the profits in the system. It's just that, nothing more. Okay, I'm going to pass on Monero because we're already 23 minutes in. So let's go for AVAX, by the way. Technicals, they're still as shitty as it is. We've got mature range things, meaning that the market now wants to break boundaries, but we still face a no third range boundary into this market. So we have to get there and make a third range boundary. We have one on the lower time frame in here, meaning that the probability to align both of them is very significant. So there is pretty lot of resistance in AVAX in the 120 area. We're trading right now at 93, meaning that, in my personal opinion, the potential reward doesn't worth the risk taking in AVAX. So same old thing, absolutely horrific a kind of a token distribution, even more on the token supply side, meaning that there's crazy load of inflation. I mean, more than half of the token supply has been printed last year. So this is crazy shit. And of course, the VC investors bought at a 200x return today. So they're definitely selling in front of your shithead. So be really cautious with AVAX. I've said it and I'll say it over again. Buy low, sell high on this token. It is a good project, but it faces a lot of competition, Binance not to name, and of course the Cosmos ecosystem as a whole. So lots of competition with a shitty tokenomics. I don't like AVAX, but I'll buy it if it goes low. Same old story in here. I had no risk limitation to buy in here, not any in here. I could have bought, okay, eventually as a dumb range boundary, but I wanted to have the context nearby, which was not the case. So I think AVAX is trading in the dumb zone, just like many of the projects. Though don't buy it here. If you want to buy it, you need to be patient. In my personal opinion, it requires going there first and then there, and this is where I'll be willing to buy AVAX. So I think it needs stabilizing. I think it's among the projects that will not make all-time highs in 2022. But of course, I will be willing to change that only if it takes over on Binance. I've made it clear AVAX needs to change the leadership. Amin is making severe mistakes in leading to these projects, and the token supply needs to be reviewed. It's really shitty. In terms of Luna, well, very interesting projects in here as well. Luna has been somehow helping the crypto market as a whole recovering from the bottoms, because basically, I've been looking for the news that has been driving this recovery, and what stood out to me is the fact that the headline, the major headline, has been the announcement of the Luna Foundation Guard that they will be bringing Bitcoin into the equation, which I like. I goddamn have to make a video about Luna, because it is the most misunderstood project in the crypto sector, and most of my concerns, most of the concerns that I had with Luna are kind of being risk balanced with that Bitcoin investment from the Luna Foundation Guard. But it's not without consequences. You have to understand that there's going to be $450 million worth of Luna that is going to be sold to buy Bitcoin. And as prices of Bitcoin rise, it's going to require even more of it. So be really cautious with that. That means the Luna Foundation Guard is selling Luna to buy the Bitcoins. And at $100 mark per Luna, can be damn sure that they're very likely picking into the Luna's funds rather than the USDT and USDC they have. So I think right now, most of the demand for Luna is going to be suppressed by the selling of the tokens from the Luna Foundation Guard. Sorry. But of course, I think this is temporary. So one very important thing comes out to me for Luna. We're trading at the trend channel above the resistant context. There is no third range boundary into the trend, leading me to believe that this is not the appropriate time to buy this fucking expensive token. But once again, that tells me one thing, the nature of that third range boundary, and if there's still no signals to trade it, feels like it's going to be a neutral third range boundary, leading me to believe that even if we go all-time high, it's going to be short-lived. Could be a Bitcoin-like we make a new all-time highs and then we suffer some kind of bear market or whatever. I don't know what's going to drive this thing, but I still think that this is not a buyable tokens as a breakout, because no mature range, meaning that if we ever go all-time high, then I'm going to short sell the crap out of this thing if it ever goes to $150, because that would be a final excess structure. Though I don't think it's worth it. So it's more like if it goes there, I'm going to sell the crap out of Luna. I'm going to really short sell the token. Otherwise, I think the likeliest outcome is to build a third range boundary, neutral run, meaning that I have to readjust my plans. My personal assumption back then was, I don't know what the hell was going on with Luna, but I'm not going to buy until we get to $20. Well, now this neutral third range boundary tells me that this is not likely. So in that perspective, I'm rising up my stakes. I never buy above 50% context line, which is going to rise because I think we're going to reverse this by next month. So my buyable area will be put below 50% context line, although it will be readjusted on the 1st of April. And down to the previous bottom area. This is the area in which I'm going to accumulate Lunas if they retrace out there. Of course, if it goes without me, like I said, I'm not going to fight against it. But in here, if we go to a 1-to-1 ratio over that breakout, I'm going to short sell their fucking asses. So until then, well, you have the plan. I don't buy in here because I think it's way more worth selling it, but I'm not selling without signals. But I think signals are pretty much coming within the next few days, so I'm monitoring it. I don't think the risk rewards are worth it, so I'm not going to short sell Luna. Eventually arbitrage it, but well, eventually just understand not buying in here, okay? I'm buying low, and if it goes too high too quickly, I'm going to sell the fuck out of it. Okay, so we've done it. There are lots of other things that I could cover. I could eventually have a quick look at Polkadot. But you know that I don't like the projects. That doesn't mean you don't, okay? Do your own research, do your own job. Don't ever trade my personal assumptions. Look at the technicals more than anything else. Okay, if we just stand with the technicals, top to bottom for this range, lots of volume on top of our heads, so lots of resistance in here. We're just trading at the resistant trend channel. It is below the 50% context line. There's still room to the upside for this cycle, but we've already broken one. So I'm sorry, folks. I think every bit of volume on Polkadot is going to be sold. We have trending signal on the trend channel. I don't like that at all. So I think Polkadot, if it ever goes to $27, I'm going to short sell it. Or at least arbitrage it, meaning that I will sell this token to buy another one. So spread betting on the fact that some other tokens will go faster than Polkadot. I'm still not convinced with the roadmap. I'm still not convinced with the tokenomics, and I'm still not convinced with the token price. So I think no, it's a full red flag for me all across the board for Polkadot, though I'm not going down this road. There are lots of competition for the interoperability stuff, and I think Cosmos is way more advanced, and moreover we're now having AVAX, who is trying to play that game as well with the subnet stuff. So I'm sorry, I think Polkadot cannot stand the competition in here. I could be wrong, but until further notice, I think in technical perspective, this project doesn't have the lights on it. The technicals doesn't favor that token. It's not that shitty, but I won't buy it until I've seen some strength, which I don't see at the moment. I see nothing but weaknesses in here. That's going to be it for today. Sorry guys, 30 minutes in, it's really way too long, but I wanted to make kind of an overview of the different projects. So you'll see the relative strength, the relative structure. If I haven't covered your favorite assets, do the same old thing, okay? Look at the relative position of the trend channel relative to the 50% context line. Where are the technical resistance if we ever cross it? How is the volume distribution of the preceding ranges? Because we're ranging everywhere on every asset. So what is the structure of that range? Where is the third range boundary? If there are no third range boundary, which is the case, for example, on Solana and AVAX, as well as Luna, all of these projects will very likely face severe technical resistance on these third range boundary territories, and they will very likely not make all-time highs in 2022. I'm not going to short Luna, but if it ever goes too quickly up, I'll short sell the fuck out of it. Okay? So be smart, look at the text, and as usual, understand this year's battle. It's all about interoperability and governance. It's not just interoperability. I think there's a clear winner for this, and this is the Cosmos ecosystem. But that doesn't mean it's going to translate into atoms prices. We've made an entire video about the Cosmos ecosystem. Look at it if you haven't. Understand that betting on Atom alone today is going to be very risky. Okay, bye-bye.